Hi everyone, welcome to another Port Jackson Securities webinar. I am your webinar host, Caitlin Chung, and today we're joined by Greg Pawson, the CEO of Kina Securities. Thank you so much for joining us today, Greg.
Thank you. Good morning, everyone.
So today, Greg will go through a presentation and then we will take questions from the floor. So whilst Greg is presenting, feel free to type in your questions into the chat and then we will get to them after the presentation. So Greg, would you like to start us off?
Yeah, sure. Good morning, everyone. Thank you. A very big thank you, actually, to Port Jackson Securities for facilitating this session. Apologies for a slightly late start. We were just familiarising ourselves with the technology, but I think we're good to go. So look, a good opportunity for us to tell you a little bit about Kina Securities Limited. We're dual listed on the Australian Stock Exchange and PNGX. I've got a few slides that I'll work through here, which should take me no longer, hopefully, than 15-20 minutes, and then perhaps open up for any questions that you might have about our company. So look, just to begin, Kina was originally formed as a finance company, actually back in 1986, domiciled in Port Moresby, which is the capital of Papua New Guinea. In its early days, it was really just a small asset finance organisation, privately owned. It had a funds administration business, which I'll talk a little bit about later on, a funds management business as well, and those were really the legacy parts of the organisation, if you like, that grew over time. Today, the funds management business is quite an integral part of the group. It contributes quite a reasonable amount of revenue. We're the leading investment manager in Papua New Guinea. We have one of two investment banking licenses in PNG. And we have around a 60% market share of that particular part of the market. We are the lead investment manager for the biggest provident fund in PNG, number one superannuation. We also have a funds administration business. We essentially do all of the back office operations for the three largest provident funds in PNG. Number one, who I just mentioned, NAS Fund and Comrade Trustees. That gives us access to around 90% of the market and data on effectively every Papua New Guinean that's contributing to superannuation. Like in Australia, contributing to a super fund is compulsory. It's about 12% of annual earnings. And as a result, there's around 650,000 Provident Fund members who, as I said, we essentially have access to that data, and also every employer in the country. So if we can tap into that successfully, that gives us access to many, many more customers over time. Essentially, the company listed in 2015 to acquire Maybank, PNG, Maybank being a Malaysian-based organisation out of KL, one of the biggest banks actually in Malaysia, that had been in PNG for some time. And it gave Kina the opportunity to acquire a banking licence and establish a banking footprint in PNG. It was a small bank, the fourth largest, but quite small, largely a foreign exchange bank. And to be honest, it was really only there to service a large Malaysian and Chinese customer base at the time. But as I mentioned, it gave Kina the opportunity to establish itself as a bank, as a banking brand, and to build on from there. As a result of that acquisition, Kina did an IPO to raise about 120 million AUD to fund the acquisition. And in 2019, we then acquired the retail, commercial and SME businesses of ANZ. That was an incredibly complex integration program because we were only acquiring those three customer segments. ANZ were maintaining a presence in PNG, but largely to service the corporate sector, the multinationals, most of whom are Australian organisations in the resources sector operating in PNG. But the acquisition was strategically important for us because it gave us a national footprint. So 17 branches right across the entire country. Prior to that, with the Maybank business, we were only operating in Port Moresby and Lae. And whilst they're the two biggest commercial centres, 80% of the country's GDP comes out of the provincial locations. So that was a critical acquisition. We completed that successfully. It was an 18-month program, and it effectively meant we had to take around 160,000 ANZ customers and move them from their banking platform to ours. We did that very successfully, and I'm pleased to report we didn't lose one customer as part of that very complex acquisition program. Following on from that, in 2020, we divested of a sub-brand of ours called Easy Loan to an organisation called MyBank. Nationwide Microfinance Bank is the largest microfinance organisation in PNG. They have around 450,000 customers, and we took a strategic stake of 15% in that organisation back in 2020. At the same time, we did an additional capital raise of around 80 million AUD, and that was following a simplification of our corporate structure and really to strengthen our capital base and enable us to start to tap into the top end of the market in PNG, which is lucrative, the corporate sector, by lifting what we call our single borrower limit to around 120 million Kina. So that's sort of the journey in terms of where we've come from today, since humble beginnings in the mid-80s. Today, we're now the second largest bank by lending assets in the country. As I said, we're the largest fund administrator. We're also the largest fund manager, and we're reaching over 650,000 Papua New Guineans through the Kina Bank brand of close to 185,000 customers, and the MyBank strategic stake that we have, which is critically important in PNG because sadly still today around 70% of the country remains unbanked. So that partnership that we have with MyBank is a key factor in helping to bring more Papua New Guineans into the financial services and the banking sector over time. And we're also the leading stockbroking company. We are listed on PNGX. It's a relatively small exchange, but we have a commanding market share in that space as well. As you can see from this slide, full suite of products and services that you would expect from a fully fledged commercial bank. The advantage we have, I think, strategically and in competition with the other three banks in PNG that I'll talk about shortly, is clearly the funds management, funds administration, and the access to that information on practically every Papua New Guinean that's working or is employed in the country through what we call Kina Investment and Superannuation Services and KFM, Kina Funds Management as well. But pleased to report a full suite of commercial and corporate banking services. We've spent a lot of money on that over the last 3 years, around 75 million Kina, upgrading our core banking infrastructure and our IPA network to be able to make us a little bit more flexible and nimble. And I would proudly suggest that we have the leading digital product suite in PNG in terms of online banking for our personal or consumer customers, and also commercial and corporate through our corporate online banking platform as well. So looking at locations, that's just a map of PNG in terms of our current locations. We've got a branch network of 17 sites. 7 of those are located in Port Moresby, the largest city, a population of close to 1 million people. Lae, we have two sites there. Over the course of this year, we are expanding our footprint. We're going into 3 new locations, as well as setting up commercial banking centres in Port Moresby, Lae, Kokopo, Madang and Goroko and Mount Hagen, which will be strategically important for us in terms of growing out our customer base over the coming years. So just looking at our corporate structure, I've touched on most of that. The parent company, Kina Securities Limited, holds the commercial banking licence in PNG. Kina Funds Management and Kina Investment, Superannuation Services and Wealth Management are integral parts of the group, contributing combined around 20% to the group's revenue. And last year that grew almost 25% year on year. So some pleasing results coming from those subsidiaries. A little bit about the PNG economy. Look, it's really centred around the resources sector. A lot of the large Australian mining, oil and resource companies, as well as international conglomerates are based in PNG. As a result of the announcement of the Papua LNG project going ahead, that's a $13 billion US contracted new LNG plant sponsored by Total and Santos. They got the green light from the government earlier this year. There's a couple of other major resource projects pending approval by the government. That's unlikely to happen for the next sort of 2 to 3 months in light of the PNG election. They have an election every 5 years, so we're in the midst of that at the moment. Unfortunately, it's quite a long, drawn-out process. Unlike Australia, it goes for about 3 months, so a lot of focus there by the current governing party to hopefully, I would imagine from their perspective, to be re-elected. But look, things are looking quite positive. We sailed through the pandemic reasonably unscathed, unlike a lot of other countries in the West. No sort of severe lockdowns. The country largely remained open. The borders were shut for a little while, but that's all back open and running. And the forecast for 2022 is to get to around 5% growth in GDP. A lot of that will be fueled by the capital expenditure in relation to the Papua LNG project. To put that in context, that's around the same size as the current ExxonMobil PNG LNG plant. That was about a $15 billion US project. And as I said before, a lot of the growth predicted over the next 5 years will come from the resources sector, and with the prices of commodities increasing, the country's in a pretty good shape. The country is in pretty good shape, which is good. This just gives you a snapshot of the banking sector, and again, quite unique in a PNG context. You've got one bank with a predominantly large market share, and some would say a monopoly at 68%. You've got us coming in at around 14 in terms of loans. Total footings, we're around the 14-15% mark if you include deposits as well. ANZ 9%, 12% in deposits. Westpac 9 and 10% respectively, a little bit smaller than us. They do have an edge in terms of foreign exchange earnings, and that's something that we've been very much focused on. We've had outstanding growth actually over the last 3 years, tapping into the foreign exchange market. Most of the foreign exchange earnings, again, coming out of the resources and mining sectors, but we increased our market share in FX quite significantly last year. We're sitting at around 16% at the moment. But that again presents quite a significant opportunity for us moving forward. So why does BSP have such a dominant market share? It's actually a function of acquiring the PNG Banking Corporation about 20 years ago during the GFC, when PNG BC effectively went broke. One of the other reasons that they have a large market share is, as a result of that acquisition, they got quite a large footprint across the country. They're probably in twice as many locations as what we are. They have around 1.5 million customers, but their balance sheet is actually propped up largely because they bank the sovereign. So they're the principal banker to the government, the PNG government. We have no exposure at all to government. Our play in that sector of the market has really been about payments and digitalisation of payments, as opposed to lending to the sovereign directly, which BSP currently do. They also have quite an extensive footprint across the Pacific. I was formerly the general manager for Westpac Pacific and led the divestment of 5 of Westpac's Pacific Island nations about 10 years ago to BSP. So they have about 10 locations across the Pacific Islands, as well as their core business in PNG, and they're the largest commercial bank currently operating in Fiji, albeit a smaller market. They have a dominant position there as well. The Australian banks in both PNG and Fiji, for that matter, really have dropped the ball. I'm sure many of you have seen, we made a bid for Westpac late in 2020 and through the course of 2021. We were successful in getting all the necessary regulatory approvals to acquire Westpac's Fiji business, but unfortunately we couldn't in PNG. The ICCC knocked us back. That was really a function of political intervention. I think the government and certainly the central bank, Bank of PNG, didn't want an Australian bank obviously to leave their shores under their watch. And Westpac had a preference to sell both businesses together. We were still prepared to go ahead with the Fiji acquisition, but pulled out of the transaction when Westpac sort of rejected that in isolation. But as a result of that, it's fair to say, I think, all of the banking sector in PNG in particular are not really taking Westpac or ANZ seriously. They were the first banks in PNG, but they've made it very clear that they don't necessarily want to be there, which presents quite a considerable opportunity for us in terms of organic growth. And you can see the gap with BSP at 68% and us sitting there at sort of around the 14-15% mark. That's been our growth trajectory. It's been a compound annual growth rate in terms of NPAT of around 25% year on year. Steady as she goes. I mean, we don't obviously want to grow too fast, too quick. That would present issues for us in terms of staffing and infrastructure. But our growth rate's been solid, and we're certainly anticipating over the next sort of 3 years, in line with our 2025 strategic plan, that degree of growth will continue. Much around probably 50% from the market increasing in terms of overall activity, so systems growth, but also a big chunk, the other 50%, coming from our competitors. BSP have the largest share in the SME and home finance market in PNG. That's an emerging market. It's exciting in terms of growth prospects as more Papua New Guineans come into that sort of mid-market demographic and are buying homes. So that's going to be a key focus for us today and in the future as well. Gives you a bit of an indication of our loan portfolio. Our loan book is actually very diverse. We do have a degree of concentration in wholesale and retail, but that's to be expected in a country like PNG that is a net importer. So that sector of the market in itself is the biggest sector in the market, so you would expect us to have our largest exposure there, but certainly very diversified. A big focus at the moment for us in the agricultural sector, which presents some really tremendous opportunities moving forward, and one of the reasons that we are setting up those commercial banking centres in some of the provincial locations that I talked about earlier. Deposits, a really good spread. One of the pleasing things with the ANZ acquisition for us was to improve our liquidity quite significantly, which is what we have done, from low-cost transaction accounts, so savings and cheque accounts, as opposed to being reliant on higher interest-bearing term deposits and cash management accounts. And that's certainly reflected in the makeup of our deposit portfolio. PNG at the moment is extremely liquid in terms of Kina. We are, unlike the banking sector here in Australia, we are completely self-funding and some. Our deposit to loan ratio sits at about 150%. One of the challenges that we have is what we actually do with those deposits. So look, a quick snapshot of 2021. I mentioned earlier, our CAGR, compound annual growth rate in terms of NPAT, has been sitting at around 25%. From 2020 to 2021, we lifted our underlying NPAT to 27%. Lending was up pleasingly by 21%, and the capital raise that we did in late 2019 was deployed into the corporate sector, as we committed to do to our investors. So we saw our EPS back to where it was in 2019 over the course of 2021 as well. Deposits up 19%, so good growth coming there. Flat expense base. Our cost to income sits at 58%. For the banking sector, that's relatively high, and it is a big focus for us, but you would expect it to be at that level given the relative maturity of our organisation. We plan to reduce that cost to income over time, not by reducing our expenditure or capital expenditure, I should say, on innovation and new products and services for PNG, but largely through revenue growth, higher revenue growth than our cost base, and that was certainly the story in 2021. FX I touched on earlier. It's a big component of the banking sector in terms of revenue in PNG, and again, we lifted our revenue by 19% over 2021, and we're sitting at about a 16% market share at the moment, so plenty of opportunities to keep that growth trajectory going as well. Net customer growth was up 8%. I mentioned earlier, if you add MyBank into that equation, we brought close to over 150,000 new customers into the banking market in PNG, which was really pleasing, and good growth in the corporate banking sector where we didn't really have a presence. And today our market share is sitting at about 6-7%. So again, plenty of upside in that space as well. Our dividend payout ratio has been at the upper end of our band, which is sort of in 60 to 80% of our earnings, and I think investors have been happy with that as a result. Over the course of 2021, lots of initiatives summarised on this slide here, particularly in relation to brand and marketing. with the advent of becoming a fully fledged commercial bank, we really needed to improve how we reflect our brand in the marketplace, which is what you're seeing there in the top right-hand corner now, and that's been very, very successful. We have arguably a best-in-class website with online capabilities to open accounts and also apply for consumer lending. That's a first in PNG, and we've got some further developments around what we call our eKYC program, which is the ability for customers to effectively onboard themselves through the funds administration business that I was talking about earlier. That will be a key piece of work that we will implement in conjunction with the funds, which effectively gives their members the opportunity to set up their own Kina Bank accounts and services themselves online, which will be a real strategic advantage for us as a financial services organisation. Well, big focus on our digital channels. In fact, our revenues now from a zero start 2 years ago are around 30 to 35 million Kina a year. That's an uplift, and we achieved, I should say, an uplift of 65% year on year from 2020 to 2021, and are forecasting similar growth this year with the expansion of our digital channels. An expanded suite of products and services. This year is really all about the SME sector of the market. It's very big, around 75,000 small business in PNG. The government has a very bold aspiration that by 2050 they will have 550,000 SMEs. So we obviously want to be part of that journey. We have developed specific products and services that play to that sector, including concessional lending, online banking enhancements. Our digital payment gateway or internet payment gateway is the best performing gateway. And we're actually using that gateway at the moment with several government departments who have signed up for that. And digital partnerships such as that with Xero, which we offer to our SME and commercial customers free of charge. We also developed for a first what we call single view. And again, the fact that we have access to data on every Papua New Guinean that's contributing to superannuation in PNG meant that if they bank with Kina Bank, they can see their superannuation contributions in summary, as well as their banking accounts. Doesn't sound like much in Australian terms, but for PNG, that's a first, and we'll be the only bank that can provide that service in light of that partnership we have with the funds, the Provident funds, which is really exciting moving forward in terms of growth. So in terms of 2022, it really is about more organic growth. It's a huge opportunity for us, but in defined segments. So we're launching a private banking segment, quite lucrative in PNG terms on the 1st of July, which is really exciting. And as I mentioned, a big focus on SME and the home finance sectors of the market as well. And continuing, we've had good growth, but we want to take that to the next level. We've done a lot of work around building out resilience to ensure that we're a strong company, that we're well capitalised, and being ASX and heavily regulated by the Bank of PNG and the Securities Commission, ensuring that we're well ahead of emerging trends in that particular sector of the market, which is important for us as we continue to growing out sensibly, but at the same time maintaining a strong degree of governance across the organisation, which is important. Our mantra across our customer channels is around service excellence, and that through digital transformations. We've just completed API middleware onto our core banking system, which just really gives us the ability to be a lot more flexible and nimble around product innovation moving forward as well. We're not intending to reinvent the wheel. A lot of the products and services that we're bringing to PNG are well established and proven in other markets, and we've adopted a fast follower strategy with respect to that. Quite a significant investment in people as well across the organisation. We have close to 700 employees in PNG. As I speak, we've got all of our senior leaders in the organisation going through a 5-day leadership program. And in terms of sustainability, we're in the final throes of developing quite a comprehensive environmental social governance program as well, which we'll be publishing in the latter part of this financial year as well, so keep an eye out for that. This year, there's really several key areas of focus. I've touched on most of these, I think. Technology, first and foremost. Obviously, from time to time, we have some infrastructure challenges in PNG. It's an emerging market, it's developing, but with the advent of the Coral Sea Cable, which was funded by the Australian and US governments, the technology platforms in PNG have improved quite significantly, and more so the reliability and bandwidth. So that's really exciting for us. We'll continue to roll out a number of new digital products and services over the course of the year. The key one is centered around, as I said, EKYC, which is electronic know your customer. The ability to have that platform delivered at scale and enable people to effectively onboard themselves will be a big deal, a significant foot forward in PNG in terms of financial services in PNG. Branch footprint, we're opening 3 new locations co-branded with MyBank. Setting up bricks and mortar is not the centre of our strategy, but there are some provinces, there's 27 provinces in PNG, we're only in 7 of those, so that presents some opportunities for us moving forward as well, but sensible in terms of growth where we go, and co-branding with MyBank is the most cost-effective way to do that. Going into these locations together means that we can service all segments of the market. As I mentioned, we're launching Kina Private Bank, which is a segment for our high-value customers, a segment that's very familiar in the context of Australia, but quite unique in PNG, and heavily targeted BSP First, which is the private bank segment proposition that the #1 bank currently has in PNG. Wealth is a huge focus as more Papua New Guineans become sort of in that mid-market demographic. Obviously, there's a large population of expatriates, particularly in the key centres of Port Moresby, Lae and Mount Hagen. So building out our wealth advisory services business model will be important over the next sort of 2 to 3 years as well. We've just appointed a new lead for our corporate banking and advisory unit. There's some really good opportunities there moving forward around advising on M&A transactions, succession planning, some very large commercial organisations in PNG that are requesting our advisory services on succession planning and so forth, and just generally enhancements across our investment management platform. The secondary and retail investment market there is very unsophisticated, and we've got a couple of new products with the Securities Commission at the moment for approval, which again will be a first for PNG. Strategic partnerships, we're not going to do everything in PNG in isolation. We're working with Amazon, Xero and a number of other organisations in terms of rolling out some of these new largely digital-based initiatives in PNG, which is exciting. And as I mentioned, a big focus on ESG, our environmental social governance framework. One of our largest shareholders is Asian Development Bank. They've been incredibly helpful in providing us with technical skills and support in terms of developing our environmental social management system, which is now all up and running with the organisation, which is tremendous. So the final slide is just really a snapshot of the MyBank organisation. I mentioned before we've got a 15% stake. We're quite keen to increase that over time. Still today, 70% of the country remains unbanked, and MyBank have a set of financial inclusion products and services that are the perfect fit for bringing many of those unbanked people into the banking sector. So it's a great partnership. I mentioned earlier, I think we brought together about 150,000 new customers into the financial services sector in PNG last year, and this year we're hoping to do the same. I think our objective is around the 250,000 mark, which is an awful lot of people to bring into the banking sector. So I might leave it at there and just open it up for any questions that any of you might have, and thank you for your attention.
Thank you so much, Greg. That was a really, really good snapshot of what Kina does, especially I know we have a lot of clients that are unfamiliar with Kina, so this is a really good introduction to your company, so thank you. For those that came in late, don't forget that you can put in questions. I will do a mixture of my questions and your questions. So to get us started, I noticed that you guys are expanding your branches in PNG, but what about the rise of digital banking in today's society, especially after COVID, and we're seeing things like neobanking opening. How come you guys are expanding in terms of branches so much?
Well, I think it's a combination of both. So today, around 2/3 of our transactions are facilitated digitally, and we've had some incredible growth, customers using our online banking platforms. So smartphones, I think PNG is one of the highest penetration rates of smartphones in the world per head of population. The issue and one of the challenges in PNG has been that not many of them are using them as smartphones because of the high cost of data compared to, the average income that Papua New Guineans are earning. So we have a number of different channels that play to that. We've got a platform called USSD called Kina Connect, which is effectively an analog channel that many of our customers use. In fact, we had close to 150% growth, I think, last year in transactions being facilitated through that digital channel. And we certainly don't want customers coming into branches to do very simple transactions. But the locations that we are expanding into are big business centres, and it is important to have a street frontage in those locations, because over time, our branches, as they have in Australia, will become more of a facilitator for small to medium businesses that want to come in and just sit down and talk about their business and what they need from us moving forward. And a key part of differentiation for us is our model is advisory based. So we're not just a transactional bank. We don't just deal in deposits and loans and transaction accounts. We have a wide range of advisory services. We connect to a number of different organisations in PNG that we have partnerships through, from business planning, from cash flow forecasting. Xero is a good one. It completely automates the BAS and tax returns for SME commercial customers, saving them a considerable amount of time. So branches default to that type of advisory-based model rather than, queues of consumer customers coming in. Like Australia, digital services in PNG are quite advanced. We're about to launch a new remittance platform, which is actually modelled off two global organisations, TransferWise and Revolut, which effectively means that you can onboard yourself and send money to 7 different countries around the world using your mobile phone. So we have those facilities available in PNG, and that's been sort of a key focus for us. And we're seeing each year more and more customers accessing and using those digital platforms. But as I said, branches are still an integral part of our strategy. We need a footprint. Business customers, I think, expect to be able to come in and talk to us, and that's how branches are kind of defaulting to that broader sort of service hub for those types of customers moving forward.
Yeah, I know there's a rise in neobanking, but that doesn't consider the human aspect, and especially for SMEs, how they, get their advice in person. There's no emotional touch to it. Someone wants to.
One of the biggest neobanks in Australia, and it's terrific. I don't have to talk to anybody, but if something goes wrong, they're very hard to track down to solve your problem. That's for sure.
Yeah. So for the rejected Westpac acquisition, you did a significant capital raise. What are your plans for the capital raised now that the rationale for the capital raise no longer exists?
Well, there were 2 reasons that we actually raised additional capital back in 2019. One of them I touched on earlier, which was around what we call our single borrower limit. So there's a regulation in the Bank of Papua New Guinea, as there is in Australia, by the way, that says that you can't lend more than 25% of your capital base to one single entity or a group of connected entities. Now that for us was a bit of a restriction, because at the time it meant that we could only lend up to around 40 million Kina. Now that's about 15 million AUD. For us to be really taken seriously as a commercial and corporate bank, we needed to increase that. And the way to do that effectively was to lift our capital base, which we did. We raised about 80 million AUD, I think, in addition to the original IPO that we did back in 2015, which was around 120 million AUD. So that was the main reason. And very quickly, we did that. We deployed that. So we've got a number of customers now that have exposures with us up to around the 120 million Kina. We participated in our first syndicated loan facility in the resources sector with Oil Search, which is now Santos. which was really important for us from a credibility point of view, because it meant that the multinationals were taking us seriously as a commercial and corporate bank. And I mentioned earlier, you know, with Asian Development Bank, which is the only AAA rated, investment grade rated bank in the Pacific, Southeast Asia Pacific region, being a shareholder, again, just gave us that additional credibility that we needed. So we've deployed that. Our EPS is back to where it was in 2019, and we're hoping to continue, obviously, to grow that. We are well capitalised. Our capital adequacy ratio is sitting in the early sort of 20% mark. That's important in PNG. It's an emerging market, and operating in emerging markets comes with some additional risk from time to time. So we're comfortable at sitting at around that 20%, but obviously the organic growth opportunity for us, for the reasons that we're backing into a bank with a very dominant market share, that are a little bit distracted and unfocused at the moment, is quite significant for us. But if anything did pop up that sort of had the right degree of synergies from an acquisition, we would be open to that as well. We are developing, with the advent of the Westpac transaction not going ahead, one of the things that we did discover, particularly with respect to Fiji, is some great technology talent in that market. They're on the Southern Cross cable, which runs from Australia to the US. The technology infrastructure that they have there is quite superior to what we have in PNG. We're probably about 10 years behind. So there's an opportunity for us, I think, to build out some really strong ICT talent in Fiji, base it there to support the PNG business moving forward. And if the right opportunity came across to acquire something, it's a relatively small market, but we would use it more as a test and learn type environment, then we'd be quite keen to do that. In fact, we did a field trip to that market just last week. So there could be some exciting opportunities there moving forward as well. But our core focus, rightly, should be Papua New Guinea, for all the reasons that I've spoken about. You know, 14-15% market share up against BSP at close to 70%, and 70% of the country today still being unbanked, suggests that we'll have plenty of work to do in that market for the foreseeable future. Suggest.
Yeah. And I'm not sure what BSP currently offers in terms of share trading, but would there be a demand for you guys to expand and start a share trading platform?
Oh, absolutely. We're the biggest stockbroker in PNG at the moment, and you know we're looking at some of the emerging trends offshore in terms of trading platforms and you know the ability to acquire cryptocurrencies and all those sorts of things as well. Very much in its infancy in PNG, but as I said earlier, you know we don't have any intentions really of reinventing the wheel. If there's some good platforms that we can acquire in partnership, we would certainly look to do that. And there is definitely, I think, a market opportunity there with our sort of commanding position in terms of being the leading stockbroker as it stands today. BSP do have a small stockbroking business called BSP Capital, but it's quite insignificant in terms of market share. I think it's about 15-20%.
Right. And speaking of crypto, with the crypto decline and, you know, with worldwide events such as Ukraine, have your clients in your fund been panicking, or are they pretty calm at the moment?
Oh, I'd say there's a degree of calmness. Fortunately, we don't have too many exposures to you know those markets that are experiencing a bit of turmoil at the moment. I think for us, what's important is the degree of governance that we have across the organisation to manage those types of risks. And you know, we're obviously as a financial services organisation always strengthening, particularly our cyber security. We've got quite a significant investment in that space at the moment to protect all of our networks and the funds that we manage as well.
And then I know that you were discussing in the presentation that you guys are doing bank feeds with Xero. Is there opportunity for you guys to do that with other accounting platforms?
Yeah, Xero is probably the best one in terms of the right fit. Xero have, I think, quite a competitive advantage in the SME and commercial sector, and that's a big portion of the PNG market. And certainly the uptake from our customers has been really tremendous. So I think, with that, we have quite a strong form of strategic differentiation from the other banks who don't offer that service as an exclusive licensing arrangement with us. So no, I think we'll continue to use that to sort of expand, that opportunity to grow out the number of SME and commercial customers that we bank in PNG.
And what's the legislation in PNG like for open banking?
Developing, I would say. So the Reserve Bank of Australia actually have quite a high degree of influence on the central bank, the Bank of Papua New Guinea, and have done, from colonial days pre-independence in 1975. So it's certainly a topic for discussion, but I think at this point in time, let's just see how that develops in other Western economies and markets that are looking at it or have launched it. We're not seeing anything sort of, groundbreaking at the moment that would cause us to think that we need to move quickly on that. The sort of clearing, payments clearing facilities through Bank of PNG are certainly right up there in terms of global competitiveness. And there's opportunities for other organisations to join the main switch over time. But really, for that to be effective, they need to have a bit more scale. We do have a partnership model with some of the smaller sort of microfinance banks and financial services organisations, more like building societies where we facilitate their payments as a fee-for-service model. But, it's just a watch and just see what's happening and what's evolving, and whether we need to jump on the bandwagon or not is sort of open for debate right now.
And last question, I know you said your core focus right now is on PNG, and especially with such a great market share, would you ever see Kina expanding beyond PNG?
Yes, definitely. It's something that we have actively deliberated with our board. In fact, we've looked at it more sort of from a Pan-Pacific perspective, if there would be other markets that we'd be interested in. We never really have thought about expanding across the Pacific. So if we did do anything in another jurisdiction, it would be sort of more west of PNG rather than east. I mean, I spoke earlier about Fiji. That's really about enhancing our ICT capability. It's hard to get very good, strong talent in ICT and PNG, and to do so comes at a very, very high cost. And I think setting up that type of facility in a market like Fiji, where there's some really good incentives to do so, will also help us continue to focus on reducing our cost to serve over time. But yeah, we certainly would. I mean, obviously markets in Southeast Asia are intensely competitive. If you look at jurisdictions like Indonesia and Singapore, there's over 120 banks. So we certainly wouldn't be going in as a competitor, but there might be something that we can do from an investment banking point of view, using our funds administration, funds management platforms. There could be opportunities in other markets to acquire, businesses that are in those sectors. So yeah, again, like open banking, just a bit of a watching brief. If we came across something that we felt was a good synergy, that had the appropriate settings in terms of return on investment, we'd certainly be keen to have a look at it.
Well, it seems really exciting what's coming for you guys for the rest of the year. If you didn't get to put in your question, you're please welcome to email me, and I will pass the questions on to Greg. But other than that, thank you so much, Greg, for joining us. We got some really valuable information today. So thank you so much for joining me.
Great. Thanks again for facilitating it. And any questions, I think Sam's details, Sam's head of our investor relations team, are up on the screen as we speak. Thanks, everyone. Good to catch up.
Yeah. Thank you so much. Thank you. Bye.